Hey, it's Mac with PriceActionTradingSystem.com, and it's Friday, March 1st. We finished up the month of February. The trading has just been really good. It's only 11 o'clock today. I'm doing this early, but it's been such a good week. It's been such a great day that, I'm done, and I thought I'd go ahead and do this video. And I keep getting, I don't get it as much, but I get this quite often, so it just kind of prompted me to think, hey, I'm done early today. I'll take this time to talk about where to place your stops and how do you place your stops. And there's some specific rules on it. And what happens with me is some of this stuff is so basic that, a lot of times I don't realize that you got to talk about it more often so that people will understand. And I know there were quite a few people that were confused today, and what you're doing is you're looking at this channel started yesterday, and you can do that, but what you got to understand, if you're trading off of this channel right here, this break may be huge compared to the break off the daily stuff. And so, this might be one leg. There's really two legs here and then a big correction. But it's just much more difficult to determine from that channel where your reversal is going to be and what's going to happen if that's what you were doing. And there were some people that were trading off of that channel right there. They noticed that channel and they're trading off of that. And there's nothing wrong with that. But what you got to understand is, I think what confused them is they were looking for this retest off of this. Well, maybe we're going to get the retest now after these two legs up, but we can't seem to get below this area here now. And notice, so what I'm doing is I'm only trading off. I don't care so much. That stuff's important. I got to be careful how I say this, because it don't matter what I say. Somebody picks up on some little something and they're questioning me about it. And so I got to be careful what I say, because I don't even want to go down some of these roads, if that makes sense to you guys and gals too. I know we got gals watching the videos and trading too. So when I say guys, I'm talking about everybody. I'm not trying to be a chauvinist or anything, so don't take it that way. That's just the way I talk. So, but anyway, you're going to do much better the way we design the rules and the way the price action works. But that'll show you that price action works on any level. But the way we're teaching this is to find the trend lines and the lines of the day, and then you can count more on the moves and the retests and things like that of coming much quicker. If you get this one wrong right here, which it comes down, then you can ride this little move out without much damage, because your stop goes above the signal bar, and that's what I'm going to talk about in a minute, and then it goes on down. But if you try to start getting short up here and then it starts going against you, you can't ride that out. And, it's just a total different game. So, I'm not trying to discourage you. If you want to trade daily charts, you can trade daily charts, but the nuances are going to be slightly different. You're not going to, you may want to trade and with a 4-point stop and try to get, 4 points for your target or 8 points or whatever. If you're going to go to a bigger chart, your stops have to be bigger, your targets have to be bigger. All this stuff that we're teaching with the 4 ticks and the 2-point stop, and I'm going to clarify that in a minute, because a lot of people are confused about what I mean by a 2-point stop. If you're going to use all that stuff, that's based on using the trends and the channels and the breaks and the support and the resistance for today's price action. A lot of times you might use yesterday's support or resistance to help you find the next area, but the trades are based on what's going on today, the rules and stuff. So hopefully that makes sense to people. And I always like to ask, does that, make sure you let me know, is that clear? If not, I'll try to explain it a different way, because sometimes you can explain something one way and nobody gets it, or maybe half the people get it and you explain it in a different way and the other half get it, or then everybody gets it or whatever. So, but let's talk about the trades real quick, and then I'm going to talk about stops. And actually, let's go ahead and talk about the stops first, then I'll talk about yesterday's trade, because I'm probably going to put this video on the website, and I don't know if I'll get to it today. It's Friday, but since I'm done early, I may even write, put an article there and put this video with it on the website. So people will understand stops. The idea behind your stop, you know, people think that when we say a 2-point stop, that you just place a 2-point stop, and you know, when you get, you know, you use that, and if you get stopped out on it, you get stopped out on it. Very rarely do I ever take a 2-point stop. The idea with the 2-point stop is that's the maximum you can use to get in the trade. If you can't get in the trade with a 2-point stop, then either you got to skip it or you got to go with a 2-point stop, and there's a chance you might get stopped out on it if it's not in the proper place. And when I say the proper place, as an example, this trade right here, there's a short right here. If you went short right here, excuse me, if you went short right here, your stop has to go above, this is your signal bar right here. So if you go short right there, your stop has to go above that bar. Has to. Because if it doesn't, then you're not using the structure of the price action to protect your stop. And let's say you go short right here and you're trying to stay in with a 4-point stop and it's right here. Well, guess what? You got stopped out only to see prices go exactly where you thought they were going to go. So your stop has to go above that bar. And if prices break above that, normally what I like to do is do it 2 ticks above that. So I like to get in the trade and have my stop 2 ticks above my signal bar, or if you're coming off the low like down here, 2 ticks below your signal bar. But that's where your stop has to go to use the structure of the price action to protect it. And hopefully that makes sense, because if you put your stop anywhere in this bar trying to save, you know, trying to keep your, you know, I hear it all the time, your stop can't be bigger than your target. Your stop can't be bigger than your target. Well, I understand why people say that. Money management, I don't want to say that money management is not important, but I don't ever even think about money management. I know the rules. The rules say you have to have your stop above the signal bar, and you put your stop there, and if you get stopped out, you get stopped out. I don't care if it's 2 ticks or 4 ticks or 8 ticks. You know, I don't want to take 8 ticks any more than I have to, but sometimes that's what you got to do. And if you get stopped out, you just get stopped out. But if you get it above there and you're using the price action to your favor, you rarely get stopped out on it. It doesn't come into play that often, and you can see that. I'm going to show you every one of our entries, and I'm going to show you that prices never would have stopped you out on them. They just, you know, there's one here that I'll talk about in a minute. But notice that my stop, look how close I came. If I had it one stock, or if I kept it just 1 tick, I usually keep mine 2, and you could have kept yours 2 and stayed within 2 points here. Let's just see if you'd have taken a maximum stop, what it would have. Your entry was 0575. And so if you had your stop 1 tick, it's 0750. So if you kept it 2, it was 2 points. So I was within my 2 points to keep it 2 ticks above that. And notice, even though prices pulled back, I didn't get stopped out. But guess what? If you entered here on 0575 and you try to keep a 1-point stop, that's right there. Well, you got stopped out only to see prices go exactly where you thought it was going to go. So hopefully that makes sense to you. You got to use you must use the structure of the price action to help protect your stops. Now, if prices would have broke above here and gone higher, my guess is we probably would have made another leg up like this. And, you know, so, but it didn't. And it usually won't if you're reading the price action right. If you're reading the price action, you know, if you get stopped out on it, you either got trapped or you read it wrong. That's just the bottom line, and that's what usually happens. And but anyway, so here's another example. Look what happened if you had your stop above this bar right here. You never even got close to coming back and getting you. Look at this bar. You put it 2 ticks below there. Look, you never took any heat on that entry. Here's the next one. Right there. That's a second entry long. We didn't have the trend line yet. It would have been in place, but you took the trade. There's your signal bar. Your stop goes below it. Never took any heat at all. Here's your next one. Now you got your trend line you're working off of. You could have gone long here or here. Look what happened. Neither one of them. You never took any heat on either one of them. Never. Here's your next entry. Actually, let's talk about this one first. You could have got sucked into this trade because it's a second entry long. It's a little bitty doji down here, and if your stop went below it, well then guess what? If you had it 2 ticks, you would have survived long enough to scratch out of this. Actually, when you saw this form after this, it didn't take off. That's not a good signal, because look at all the rest of them, how they took off. Look how these trades take off. And you might have even scratched out of that one. But assuming that this ends in this negative, and then it ticks lower and it comes back up in here, that's not a good sign. Go in 2 ticks, you would have survived, and you could have still got a tick or so out of this and gotten out at scratch. But so even if you got stopped out, you would have lost. Let's just see what you would have lost here. Your entry was 08 1/4. The most you would have lost is 4 ticks. So, use the rules the way we teach them. Your stop goes below the signal bar, a tick or 2, and that protects you. And then you come down here, you get your next entry. You're looking for prices to go long. You're not taking any shorts yet, so you got trapped here, and that would have been good enough for a scalp. All traps usually are. So, you could have even reversed out of that. I don't recommend that people do that, and I probably shouldn't have said that, because you'll be reversing and then you'll be losing twice. So don't reverse out of trades until you know you can read price action extremely well. So I'll just leave it at that. But now you've got an entry right here. Your stop goes below the signal bar. And guess what? Your trade never takes any heat. And this is a perfect double bottom. You're already looking for prices to go back and retest the high. Do you know it's going to go that far? No. But if you had a runner, guess what? You rode that all the way up. No runners on this one, but a runner here, here, or here, and you could have ridden this all the way to here. If you got in down here, you're talking about 18 points. If you got in here, you're talking about 07 or so to, you're talking about 10 points. All right, then guess what? Then you got a double top up here. You're looking for, you've had your break of this little channel. Prices are going up, and you got it turns down right here. There's your entry. If you want to take that entry, it's a double top. You're looking for prices to correct now. You're way overdone, so you enter right there. Your stop goes right there. Look, it never was threatened at all, and you could still be. Actually, I don't know if you could. You would have got a runner. Yeah, you could have ridden this all the way to the bottom down here where you had this reversal pattern. And then your next one's right here. Your stop goes right here. Look at it. Your stop was never threatened. And it's keep going. There's your next entry, a double top right off the trend channel line. Look at it go. Your stop's never threatened. So there's only one trade here that you might have lost money on if you're reading the price action. I mean, obviously you may not have caught all these entries, and I'm betting a bunch of you didn't, because you didn't get this channel right over here based on some of the emails I've gotten this morning. This is a spike and channel. If you drew it down off of this, you probably still would have got the same thing. If you drew it off the first 2 swings, basically you still get the same thing. You get your break and then move to a new low. So, but I believe it's a spike and channel. We spiked down and then we went into this channel. And somebody, I mentioned that to somebody else. They said they thought this was too steep. Well, it's too steep to last very long, but no, you can never say a trend is too steep or not steep enough or anything. A trend is a trend. Whatever you're seeing, you got to go with. If it's too steep, it won't last very long, and that's what this was, too steep. So, then it normals out to your 45-degree angle, and it broke it. It made a new move down to a new low, and then it reversed. And then now you got this little channel kind of working up here. And we break it, we move to a new high, and then we corrected. And now we're trying to, let's see if now we broke this little channel. Let's see what happens. I don't know what's going to happen, but you just follow the price action and keep drawing your lines and following the rules. And 9 times out of 10, you will be on the right side of the market. But again, this was just a spike down, and then we went into a channel. But again, let's go back to the stops. The stop must go above your signal bar or below your signal bar if you're going long. And if you try to cheat on that, you're going to get stopped out even when you get it right. I can promise you that. not always. Today has just been a really good day where once you enter, they take off. And so even if you enter, even if you entered and had a tight stop today, you didn't hardly get stopped out because it's just everything's worked out by the book. But this is a good example right here. If you'd have entered right here and tried to do a 4-tick stop, which is what this trader told me they were trying to do, 4 and maybe 6-tick stops, you would have got stopped out right there, only to see prices go exactly where you thought they were going to go. So keep that in mind. Use the proper place. And the idea is that this is the structure of the price action, and so you're using price action structure to help protect your stop. And it doesn't mean you always take a 2-point stop. You want your stops to be as small as they can be, but still be above or below the signal bar. So I want to make that real clear. I'll say that one again. You want your stops to be as small as they can be, but still be above or below your entry bar, your signal bar. Not your entry bar, but the bar that signals your entry, and that's this bar here, that's this bar here, that's this bar here. And wherever your signal bar is, actually this was probably the signal bar on that one. This one's a little convoluted because there is a lot of overlap there. But you're looking for a new low, you got a double top, and you can't hardly ignore that trade. But again, the idea is to keep your stop below that signal bar. And if you can't do that within 2 points, you either got to find another way to get in by dropping a limit order back up in the bar and hoping it comes back and gets you. Like right here, if you tried to do that, it would have gone off without you. Notice how it never came back into that bar. So, but now if you try to do it here, let's say you wanted to stick with 4 ticks. So instead of entering here, what you got to do is drop a limit order back up in here, and that way you can still get 4 ticks and be above it. Now you might miss the trade. A lot of times you would have missed all these best trades today, but you would have caught this one. And then you could have stayed within the rules using 4 ticks. So, but the rule is you got to put your stop above or below the signal bar. And I usually like to use 2 ticks because it's amazing, like right here, how it went 1 tick lower and then it reverses. That's what they do. They use those for traps. So it's amazing how many times, I'm surprised here it didn't go 1 tick higher. But my guess is if it had gone 1 tick higher, everybody would have read this differently and been looking for another leg up, and we probably would have made another leg up. And so that's what, the price action can change that quickly. So remember that, if prices go beyond certain points, that's people, people that can read the chart are reading that and they understand what that means. That means just like right here, you weren't expecting prices to go lower. I bet you most price action traders didn't expect prices to go lower here. They were looking for them to go up from there, but they got fooled. And when it went lower, then they're expecting them to go down there and test this low. And that's exactly what we did. They ran the stops. They stopped in a lot of new shorts. They stopped out all the longs, and then they turn it back up. And look, when it hit, especially when it made that second entry, that was the final straw. We could have actually still went lower from right there. So people might have still been thinking, hey, we got to go above this before I'm going to be convinced that we're going higher. And there were probably a lot of stops above that too, because that's your price action. That's the point you got to be using. And so people might have been moving their stops down, and they put it right there. And then when we turned up, they hit all those stops, and look at that surge, boom. And then all the longs that got ran out, they got to jump back in, and that's what surges it off like that. So there's a reason, there's a rhyme and reason for all this stuff we're doing. And of course, if you don't understand what's going on, it doesn't make sense to you. And you go out and you read the forum, and somebody says your stop always has to be no bigger than your target. So if your target's 4 ticks, your stop's got to be 4 ticks. I'm not going to argue against any of that stuff, but I'm just going to tell you, be careful what you read on forums and what you read from people that, just be careful, because if they're, people write this stuff that aren't always profitable traders, or they don't really have the great trading system. And sure, if you only get it right half the time or even less than half the time, you can't take bigger stops than your target. That's common sense. But if you learn to do what we're doing, I'm just telling you, you can get to 70, 80, and even better win percentages. It's possible. I don't care what anybody tells you. Trust me, it's possible. We're only trying to get 4 ticks. So if you can read the price action in the chart, it's not that hard to get 4 ticks. Anything above that on a runner is gravy. Our goal is 4 ticks. That's all we're shooting for firsthand. Past that, it's all gravy. So don't monkey with the stuff, because if you do, and I'll just be honest with you, I've gotten a lot of emails over the years, people telling me I get stopped out even on a good trade. I can't seem to stay in the trade, and I say, are you? No, I'm only using a 4 tick stop because you can't use more than a 4 tick stop if you're only going for 4 ticks. You can't keep your stop bigger than your target. And when I hear that, I just cringe, because what you're doing is, if you're not using the price action to protect your stop, you're getting stopped out right here on a perfectly good trade. You're just not giving it time to set up, and that happens to people every single day. And so I want to make sure that I'm clear on that, because maybe I haven't always been clear on that unless you came to me and told me you were doing that, and I just didn't realize that many people would have that kind of issue, but they seem to have it. So yeah, don't monkey with the rules. The rule is, one more time, your stop always goes above or below. If you're going short, your stop's got to be above the signal bar, right? And that's the signal bar. That's the signal bar. If you're going long, the stop's got to be below the signal bar. There's your signal bar. It's got to be down here. Here's your signal bar. It's got to be below it. Here's your signal bar. It's got to be below it. Here's your signal bar going down. It's got to be above it. So you can't monkey with those rules because there's a rhyme and reason behind them. They're very critical. The only stipulation to that rule is you can't be more than 2 points from your entry point. So if you're entering here and it takes more than 2 points to get your stop above this signal bar, then you can't enter there. You got to find another reason to enter. You got to drop a limit order in there, and if you watch it go without you, you just watch it go without you. That's just how it works. And a lot of times, I'll be honest with you, honestly, I don't think about this. I just put the stop where it's going to go, and I might enter right there. And yeah, I'm taking a chance. Doesn't mean I'm going to let it go and take me out with a 2 point stop or more, but that's what I do. And I just don't, honestly, I don't think about it that much, and it just doesn't. You can see if you followed the rule today, it didn't come into play but maybe one time. Now, if you enter in the wrong place, even if you enter in the wrong place, look, this is why these areas are important. Every low here, if you could have went long off any of those pullbacks, and if you kept your stop below the signal bar, you were safe. This is the only one on the way up that didn't work. Look at them. Every single time prices pulled back. Didn't matter where. And then we're refining that even more by sticking to the key entry points, and that's where all your big moves come from. So we're taking it even one step further. So there's a rhyme and reason why this stuff works, and why the rules that you've been taught forever may not necessarily be right. And I remember reading that and hearing that for years, and maybe in some trading plans that rule is critical. But in what we're doing, if you stick to the rules that I've given you, they work. And that's just the way it is. They work. And I don't know any other way to put it. But look, coming down here, here's your signal bar. If your stop goes there, no, you don't get stopped out. Here's if you'd gone short here, there would have been your signal bar. And this is a perfect example. Let me look at this. Here's your signal bar. And look, it ticked lower, and then it reversed. But if your stop had been above that, look, you didn't get stopped out, and then it goes down. But if you're trying to cheat and cut your stop shorter, you got stopped out only to watch it go exactly where you thought it was going to go. And I just can't tell you how many times I see that happen, and people wonder why they can't make money. And here's another good example. Here's your signal bar right here. I mean, this is not a good setup, but just assuming that you went long right there, and I bet you a bunch of people did. They went long right there because they're looking for this bounce out of here. There's three little pushes down, so I bet you a bunch of people went long right there. And then guess what? It closes back in there, and it tries to go lower. But notice how it never went below that bar. And then it goes on and so you would have got stopped out there, lost money, only to see it go right where you wanted it to go. And again, this is not a trade that you would take, so don't get confused on that or ask me why I said, hey, why would you go long there? It doesn't fit the rules. No, you wouldn't go long here because we know better. As as somebody that understands price actions and follows the rules, you know better. But I can tell by the way that's set up there were people guessing that was a low and they went long there, and they got a lot of them probably had their stops right in here. They all got ran out, and then it goes right where they think it's going to go. Don't get run out putting your stop at the wrong place. And this is an example too. There might have been some there that started getting along here and had their stop, and notice it went one tick lower and then turned up. So there's that one tick, and if you can get it down to two, it's amazing how many more trades you will survive as well. And here's a good example. You might have gotten short right there. Actually, even with two stops, you'd have got that. They'd have got you there. So that's not a great example. And again, these just because I'm showing that, I'm just trying to find the bars that do that. But notice you might have gotten trapped long here. Assume that somebody got trapped to the long side right here. Let's just talk about that. And their stop goes right here. That's your signal bar. And you see what happens when it actually does move. It turns, it keeps going. So you can't afford to give it any more than that. That's a good example of showing you what happens if you give it too much. If you give this 2 points below where you entered, then you probably lost 2 points. So follow the rules and make sure you understand the rules, and you will be a whole lot better off. I can promise you that. But anyway, I'm going to wrap this up. We're almost 30 minutes today, but this was this was some good stuff, and I probably should talk about it more. But again, I'll probably post this to the website as well. And I may just do another video that only talks about the key entry points or something, and or not the key entry points, I'm sorry, how to use your stops or whatever. And so this won't be quite so long, but this is good stuff, and I hope that it maybe helped some of you today and answered some questions for some of you. But at any rate, I'm going to wrap it up. Hope you had a good trading week. Hope you have a great weekend, and we'll do it again next week. This is Mac with PriceActionTradingSystem.com, and I'll see you Monday.